Hello everyone and welcome to the weekly market review for the week Monday 21st March to Friday 25th March 2022. My name is Vishal Subandh and I'm the head of trading education for Sharekhan Education. So let's deep dive down into the charts and let's find out some key levels and some levels based on demand and supply for the coming week. All right, so this is our platform Trade Tiger and as you see, we see the Nifty chart. So let's start with the Nifty analysis for the month. So let's open the monthly chart now. And let me just get the monthly chart of the Nifty. Perfect. All right. So last week we saw that Nifty has bounced from this monthly level of demand. And this monthly level of demand is holding up pretty strongly. Currently, there is no overhead supply on the monthly chart. So we may have to go to the weekly charts to see a couple of supply zones. So on the monthly chart, if you entered the market around these areas, which is 15,900 odd levels, then you would actually expect the market to at least go in the short term towards these highs, which is more or less the all-time highs for the market, right? So the all-time high that the market has made is around 18,600. So this is more with a long-term perspective. And right now, the Nifty might tend to be in a slight uptrend or slight bullishness to a consolidation phase. All right, let's move on to the weekly chart. The weekly chart might just give us a slightly better picture. Let's move on to the weekly. Let's see what do we see on the weekly chart. So on the weekly chart, as expected from last week's analysis, the market has come into these areas. Now, this is not a great area of supply where we might expect the prices to turn drastically, but there might be some smaller time frame levels from where we could expect some potential turns, right? So let's move on to the daily chart. So on the daily chart from last week's level, which was this area of supply, which was a gap, the market, in fact, gapped up and removed this area of supply. Right now, the markets are more or less playing around within this area. But what is important to also try and understand is that the markets have given a very, very strong bounce. And if you look at the bottom, on the bottom of this chart, we have the volatility analysis. So this is basically plotting the options implied volatility on the chart. And the volatility since the time the election news was out and since the time many other things were going on, the volatility has considerably dropped. Now, usually when we see the volatility dropping considerably, um, we see that the big moves that happen, the large gap ups or the gap downs that happen, they become considerably lesser. Okay, this is a little bit of an observation if you understand what the concept of volatility is. So looking at what SGX Nifty is trading right now, SGX Nifty is trading close to around 17,323 odd levels. So which is trading close to around 40 to 45 points positive. In the last week, we saw huge gap ups in the market. Nearly the market moved up 600 points in nearly 2 days, right? And after making a low of close to around 15,990, the market has given us a significant bounce. So generally, when the market hit these higher time frame levels, they just tend to consolidate a little bit before making the move to the upside. So here are the possibilities now for the coming week, and I want to bring up an interesting analysis on the Nifty. Generally, we don't bring up this analysis, but we are going to be looking at the Nifty this time a little bit with the option seller's perspective. So this is the open interest, and basically what is the open interest telling us right now is that the highest open interest that is for the coming week, which is the week of 24th March, is 17,000 odd levels. And the highest open interest on the call front is close to around 18,000 levels. So there has been a shift in the open interest, and which is suggesting that the market doesn't want to go below 17,000 odd levels. And this is which is going to act as a strong support for this market. At the same time, 18,000 level is also going to be acting as a very, very strong resistance for the market. So what we are expecting in the coming week is that the market might be range bound with the lower level 17,000 holding and the higher level, which is 18,000. We do have a barrier in between, which is the 17,500 level, but that is not showing a very, very high open interest right now. The highest open interest for the coming week is 18,000 odd levels. So from on the basis of this, we can maintain a slightly bullish stance in the coming week. Let's now look at the monthly open interest for the Nifty, and we might obviously get a slightly different picture here. The highest open interest on the put side is around 16,500 odd levels. So it's 500 points below this week's open interest, right? So the market is not expected to go below 16,500 for this month, and it's probably going to remain between the 16,500 to probably an 18,000 range, which is quite a significant range considering the Nifty, right? So we might expect to see the broader market trading between 17,000 odd levels to 18,000 odd levels. If there is no drastic news coming out from any front, we should be seeing those levels very, very soon. All right, let's look at the chart now again, and let's look at it with a trading perspective. So if we go to a smaller time frame, let's say a 60-minute chart. So this is where the prices are currently. All right, so the prices are right in the middle of this entire move to the downside. So now the couple of possibilities are that the market might tend to again gap up on Monday and tend to consolidate here again, just like what it has been doing in the past few days over here as well, right? I mean, it's been a little bit of a tough market to be trading in after this consolidation. So if this level gets breached or gets taken out, then we might see potentially the market moving towards these levels over here. Okay, and now if you more or less line up this with the open interest, then the level to watch out for in the coming days or the coming weeks, if the market turns extremely bullish, are these levels. Okay, so this is one key level to watch out for, which is around 17,900, again a round number. And the other level to watch out for is this area over here. Right. So this area is 18,087, which is in fact coinciding with the open interest level. So it will be interesting to see what the Nifty does once it gets to this supply zone, right? Whether the Nifty begins to start turning down or whether it begins to consolidate and start moving towards 18,000. But these are the major barriers right now on the Nifty. On the demand zone, there are fresh demands created on this move to the upside. So there is this one level of demand, which is over here, this rally-based rally. And then we also have this, this gap level of demand, which is going to be acting more like a strong support for the market. And if we correlate our open interest level, then the 16,400 level is more or less coinciding with that open interest level as well, right? So if you have demand zones and supply zones supporting your open interest levels, then it just gives you a little bit of a higher conviction. All right, so this is what we expect. If the market starts correcting, we might see the market to be doing this and then continuing its move to the upside. Or if the market doesn't come down and continues to move to the upside, then we might see something like this. So let us see what happens in the coming week. It's going to be an interesting week of trading. Let's now move our analysis to the Bank Nifty chart. And let us see the Bank Nifty chart with the higher time frame perspective. Let's start off with the monthly chart. Let's remove all the tools so our charts look nice and clean. And this is what is happening on the monthly chart of Bank Nifty. Nothing much has changed, and the markets are still holding on to this monthly demand zone, indicating still there is a lot of energy left in this market to move to the upside, and there is absolutely no supply zone on the monthly chart. If we look at the weekly chart, let's move on to the weekly. So it's the weekly chart. Again, just like the Nifty, we are coming into an area of consolidation. Now, this could be an area of supply over here, but this is not a great area because if you look at the structure is not very, very great. So if the market does continue to move to the upside, we might see this area in play. And this is already a tested area of supply. So it will be interesting to see how this level holds, right? So on the weekly chart, this is the area. Let's move on to the daily chart. On the daily chart, currently, the Bank Nifty is actually holding on to this area over here on the daily, which is this gap level over here. In fact, this level is more evident on the 240-minute chart. So let me just bring up the 240-minute chart, or maybe let's go to a 120-minute chart. It's more better than this, right? So if you look at the supply zone here, this is the level where the Bank Nifty gapped up and has been consolidating, right? So if the global markets show some kind of a corrective move to the downside, because it's also been a good rally in the global markets as well, then we might start seeing some profit booking coming on from these areas. So this level is going to be a very, very crucial level for the Bank Nifty. And yes, if the Bank Nifty breaks this level, then probably we are going to be looking at another gap fill at around these levels over here. So let's keep a close watch on this area over here, which is 37,327. And on the demand side, we do have this demand zone over here, which is slightly away from the current market price. So this level, if the price does come here, this level should ideally hold if there is no news or anything of that sort, and should not have any problem in continuing its move to the upside. So what do we expect for the next week to do? So if there is a breakout of price will move towards this area of supply. And if the market begins to turn, then there will be some profit booking coming in. And if that happens, then markets might do something like this. So this is what we are expecting to see the markets to do in the coming week. Let's look at the open interest levels for the Bank Nifty. So I'm just going to change this for the Bank Nifty chart, and we will just remove. All right, so let's look at it with the weekly options expiry perspective. So right now, the highest open interest is around 37,000 odd levels for the call side. So the market participants are expecting the price to trade below 37,000. And on the put side, we have the highest open interest on so this is more or less equal to say so, but yeah, so 36,000 and 35,000. Yeah, so more or less 4,000. Yeah, so this one is 35,000. So we are expecting the markets to remain a little range bound between 35,000 to 37,000. So usually the Bank Nifty used to move on a weekly basis in 1,000-point range. But now, because of the increase in volatility, the Bank Nifty is expected to move in a 2,000-point range, right? But although this is very, very close, I expect the Bank Nifty to be trading in this range from 36,000 to 37,000. Now, if we align this with our demand zones and supply zones, we do see an area around the 36,000 odd levels over here. And this is this gap demand zone. And markets could easily come down here and do something like this before eventually cutting through this supply zone and moving up. So this is one angle of looking at this supply zone. The other angle is in case if there is a lot of selling pressure coming in, then the markets could see the move to the downside and then probably react from this area and move, right? So somehow the weekly open interest data is not really matching up with the demand and supply. Let's go on to the monthly options data and let us see if there is something that is aligning properly with our zones, right? So on the monthly front, the highest open interest is at 38,000 on the call side, and the highest put open interest is at 36,000. So 36,000 and 38,000. So again, markets are expected to be ranging between these two levels, which is also indicating that the markets may not be in the bearish mode right now. So if this 36,000 level breaks, then there can be a lot of selling and to the downside, because all these people who have sold their puts will be actually buying to cover their puts, which will cause the market to go even further down towards 35,000 levels. But of course, that is in the scenario where some news comes out. So we have to be a little watchful with this 35,000 odd level. And if you match it on the charts, the 35,000 level is more or less lining up with this gap area here. Okay. So again, just be watchful, because these levels tend to play out quite well if they line up with the open interest. All right, let's move on to the next market, which is the USD INR, and let's have a look at what the USD INR is doing. So if you look at the USD INR, let's link all the charts here. The volatility has considerably fallen from the highs, and if you look at the USD INR on the monthly chart, so on the monthly chart, the prices are retracing after breaking this high over here, but are unable to sustain and close above the high, right? So this is more or less considered as a fake out. And whenever that fake out happens, it traps a lot of retail traders and investors, who have bought aggressively because the markets have made a new high. So the retail traders and investors need to be a little careful. And look at the weekly candle now. We are having a potential level of supply now on. It's not really a supply zone, but it's more or less like a picture of supply which is being created. We would want to see some more demand to be removed actually. If we go to the daily chart, this is what we see on the daily as well. So this is that rally based drop supply, and now we also have a potential level of supply, which is this drop based drop area, which will be an area to watch out for in the coming days. Since the USD INR is inversely correlated to the Nifty, if the USD INR does decide to move up, okay, since Nifty is in a crucial level right now, the Nifty index might tend to push downwards because the USD INR is inversely correlated to the Nifty. Just in case if the USD INR decides to continue to move down, then we are going to again see a very, very strong rally in our market. And this is an area where the USD INR maybe can just take a little bit of a support and just stop here or then consolidate. And if the market on the USD INR turns out to be even more weaker, then we have this below level over here, which might take support and then start moving again to the upside. All right. So what are the scenarios here? The first scenario is if the USD INR gets into this area of supply, we might see a corrective move to the downside that will more or less, take the Nifty even further up and the Bank Nifty further up, the Sensex further up. But if that doesn't happen, and if the USD INR continues to move, up as such, then we might see the overall market correcting. All right. So let's see whether the USD INR moves down first, and if it continues to move down, Nifty, Bank Nifty will move up. And if the USD INR continues to move up and fill this area, then we might see the Nifty and the Bank Nifty moving further down. Okay, let's move on to a slightly smaller time frame on the USD INR, and let us see if there are some intraday opportunities that are lining up for trading on Monday. Okay, so if you look at some of the key areas, you can see this area of supply, and this was a extremely key area. It still stands as a key area right now because prices have not come and tested this area. So if the market does rally from this area, then we might see the market continuing its move to the downside and trying to fill all these gap levels that you see over here. And there is one more gap level over here as well, right? So this is a key area for the USD INR. And if the USD INR hits this area, at that time we would expect Nifty, Bank Nifty, and Sensex to be at opposing levels of demand, which will probably give us a good correlation between both these markets to take the next decision. On the demand side, we do have a level of demand on the USD INR. So this is a level to watch out for. Although it is just barely tested and moved up, still this level can play out, right? So 75.16, 74.94 are the levels to watch out for on the USD INR. And the range that is going to probably play out for the coming week is this supply zone to demand zone range. So we expect the market on the USD INR to be range bound between these two key areas, right? So if you're an options trader, you can plan some kind of a non-directional strategy in options. And if you want to be more towards the direction and lean against the direction, then you just need to wait till and until price comes to these levels of demand and supply to take the next course of action. All right, let's move on to crude oil. And this is also being the most stocked market after whatever happened. And let's have a look over here on crude oil. So crude oil is currently now reacting from a higher time frame level of demand, right? So we saw this big sell-off, and although this is the M6 market, but if you look at the NYMEX, which is the global market on crude oil, you will see that on the NYMEX chart, crude oil has actually hit a monthly supply zone. And generally, when prices hit a monthly supply zone, there is a big sell-off coming in because the institutions are wanting to sell at high levels. So imagine from a high of close to around 9,996, crude oil is currently trading at 79.48, right? So now on the weekly chart, this is an area of demand. But what is more keen or to watch out for is this area. So this lower area is going to be a very key area for crude oil. And if the price does come over here and decides to just consolidate a bit, it might continue and start moving up again. And if this level of crude oil breaks, then we are going to see lower levels on crude oil. So this is going to be a very crucial level to watch out for in the coming week. Let's look at the daily chart of crude oil. On the daily chart, not very clear levels of demand and supply on the daily chart. But yeah, as I mentioned earlier, that this is a key level to watch out for, and this is more or less likely to play out again if the prices come. We do have a little bit of a barrier here, and maybe we can just go to the 240-minute chart on crude oil and just check. So we do have this area over here of supply. 120-minute chart. Let's here on the 120-minute chart. Okay. So this is the key area, which is a drop-based drop on crude oil. Prices have just touched and given a nice fall. So if crude oil takes a little bit of help of this area of demand from where it is currently bouncing right now from the gap area, it will have no hesitation in moving towards these areas, right? Now, if the crude oil begins to rise and start inching towards higher levels, then that is going to create a kind of a negative effect on the equity market, right? So this is a level to watch out for, and anything could happen right now. Even there is this short-term supply zone over here on crude oil, and we could see crude oil even falling from these areas here. But the better levels to go short on crude oil is 9,190 to 9,307. And currently crude oil is bouncing from this level of demand, right? So it'll be interesting to see whether the prices do reach next week. And hopefully in our next week's analysis, we'll be able to bring the crude chart and discuss it once again. All right. So today we are going to be talking about the Nifty metal sector. Okay, so let's open the Nifty metal sector chart and let us see what the chart is doing and what are some of the key levels on the Nifty metal that are in play right now. So the Nifty metal sector is making an all-time high, and that's very evident on the monthly chart. This is the monthly demand which is holding. There is no sign of supply or selling off on the Nifty metal. Let's go to the weekly chart. On the weekly chart also, we have seen a lot of consolidation happening. There is no sign of supply or selling, which means the bias still remains more towards the bullish side than the bearish side. Let's look at the daily chart. Now, the daily chart seems to be a little interesting because right now we have not closed above this supply zone. So the supply zone is still holding, but because there is no higher time frame supply to support this this sector, the more likelihood is that the price will eventually break this supply and continue to move up. Okay. Now, the key aspect is that if that happens, what can you do as a trader and how you can align your sector chart with the stock chart, right? So if you go to the sector chart over here, and if you just go to, let's say, a 15 minutes time frame, which is an intraday time frame, and what I'm going to do is I'm going to just bring up another chart here, which is Tata Steel, which is the chart that belongs to the metal sector. And now if we just keep these two charts on the same time frame side by side, you will observe some similarity in terms of the price action. Okay, so if you look at let me just remove the linking of the graphs here. So if you look at the Nifty metal sector at the top, and if you look at Tata Steel at the bottom, more or less these charts look like mirror images, right? So let me just close this chart. Let me put this side by side so you can see it nice and big. All right, so if you look at the Nifty metal chart, the Nifty metal chart is more or less pretty strong. And the prices came very, very close towards this area of demand on the Nifty metal chart. So this is the key area of demand over here. And if prices do come into this area of demand, then more or less we should line up let's say a stock like Tata Steel or Hindalco, or let's say any metal stock company, and try to time this entry along with the stock. So this is the Tata Steel stock. And if you do a vis-a-vis comparison of, let's say, both the levels here, this is the key level to watch out for. Okay. So, and this is also a round number, which is around 1200. So usually institutions love round numbers. So for the coming week, this becomes more or less a trading opportunity. And what we expect is that if the metal sector comes into a level of demand, and if the metal sector is going to bounce and start moving up, then obviously all the metal stocks will also be pulling back to strong levels of demand, and we expect the metal stocks also to move up along with the sector chart. All right, so this was our analysis for the week. I hope you enjoyed today's weekly analysis. We'll come back with more stocks, more sectors, and more markets next week. Till then, have a safe weekend, trade safe, and see you next week. So, bye-bye.
We do not give any recommendations or financial advice. We request that the investors please consult their financial advisors or do their own research before investing.